Good morning, REBAA members. Mark Errichiello here, Victorian State Representative, and looking forward to delivering your REBAA Annual General Meeting report for the Victorian market for 2023. I've had the pleasure of attending quite a few events and conferences recently, some held by the REIV, including the Economic Forecast in August, which had some great speakers and contributors from PropTrack, the REA Group, Infrastructure Victoria and HIA. We can share the full slides and presentations if you wish, and some of the data that we've extracted for this report. Despite all the doom and gloom over the last few years since post-COVID, even with the high interest rate hikes over 12 consecutive rate rises, global economy and inflation, the housing market issues and affordability and crisis with construction, rental supply and property to buy listings, the market has some data collected between the September quarter 2012 to 2022, which did show that over 261 suburbs and towns in Victoria had doubled in growth over that 10-year period, and some 11 suburbs tripled house value, including Mornington Peninsula, which had 6 of those suburbs on the list, all over $1 million average. Point Data also provided a report at the end of the March quarter, which collected a 6-month data collection between December and March quarter, showing that there was some significant growth, even though sentiment and issues with inflation were there and rate rises. The sentiment was strong, demand to buy was strong in affordable and established suburbs, and houses in some of the more affluent suburbs as well getting significant growth, and they continue to get growth from March quarter onwards. Including any direction you looked within about a 30-kilometre radius of Melbourne CBD, established houses and suburbs getting growth over 1% onwards from March quarter average, or between 0.5 to 1% growth. A snapshot of July period with the REIV research bulletin released in August. The residential market index was positive at 0.1, and house price index went up at 0.5%. The clearance rates on average have been between 70 to 75% with auctions and post-auction sales. Reported auctions for July were over 2,600, and properties selling there within 30 to 40 days on market. Clearance rates for rental properties at 2.2%, which is back pre-COVID levels. Back down from the high spikes of 6-7% average vacancy rates for the rental market. The total number of auctions in the 12-month period were 31,000, and consistent at that 72 to 75% clearance rates, with Reservoir having the highest number of auctions in July reported, and pretty strong clearance rates there as well. So over 74% clearance rate just in July, and over 5 suburbs with 100% clearance rate with the auction sale. Labour shortages and infrastructure and jobs taking a lot of the residential market labour away, as well as supply chain issues globally. The housing market sales and confidence has been decreasing for new homes, people much preferring established, with the sentiment for new homes being at risk. And pipelines for houses are probably going to get worse before it gets better over the next 12 months, looking like a decline. With the pipeline, Infrastructure Victoria also provided some good data around and advice, independent advice with their research to the Victorian government, showing that more moderate income households who want homes with 3 bedrooms plus being pushed further away from jobs, schools and leisure opportunities close to major infrastructure. And they have put forward high recommendations for lower rise, boutique apartments, expanding growth zones and removing more red tape that could provide houses that are child friendly and people want to occupy, owner occupiers, including doing the same for dual occupancy in townhouse codes, trying to remove any bias and red tape away from local governments. There's plenty of infrastructure with Victoria's big build on the go, and plenty from election promises that have been put on hold or under review, including Melbourne Airport Rail and some other urban developments, and the biggest one, the Commonwealth Games infrastructure projects too. As mentioned, residential rental had some good growth with inner city houses already in the month between June and July, and there's been over 40% rise in rental yields since last year, and the vacancy rate sitting at 2.2%. With the commercial market, there has been some decline in the values of office spaces, obviously with a lot of exiting from the CBD over the last few years. That is starting to return, but increase in industrial and warehousing to buy, more people looking to take an increased exposure in healthcare and social infrastructure, property to purchase for investment as well, and also warehousing and infrastructure is where the demand. Some of the key advocacy priorities. REIV have decided to sell and put their Camberwell premises to tender, a commercial tender. It's being sold, and then be purchasing a more centralised building for the REIV's future. Also, REIV and REBAA for the first time have collaborated over the last 12 months to redevelop and deliver, with the plan in 2023 to deliver the buyer's agent course again. Post-state budget announcements with tax increases and land tax and tax reforms. The Real Estate Institute surveyed its members, and over 70% of the agencies had an increase of owners looking to sell, investors looking to sell this spring. This followed on into the rent freeze campaign, urging the government to reconsider the rent caps, which REBAA supported the REIV's campaign and many other associations as well, and proved to be valuable at this time to be put on hold until further notice with the housing review by government. And thank you to all the REBAA members that are also REIV members that supported the recent election for Board of Directors. Definitely honoured and feeling privileged with the responsibility coming forward with this appointment.